Welcome to part 4 of our series, How to Become Rich by Learning Cryptocurrency. So far, we've covered the basics, market cycles, and long-term investing, the safest ways to grow your wealth. But if you want to accelerate your growth, if you want faster results, then step number 4 is for you. Today, we're diving deep into crypto trading, a skill that can turn small amounts of money into big gains, if you learn it the right way. Now let's move to step number 4, learn crypto trading. Crypto trading is powerful, but only when treated as a skill, not a gamble. Most people lose money because they chase quick profits without learning the basics. But you're not here to gamble. You're here to learn, grow, and earn correctly. Let's break down everything you need to understand. First, trading is not guessing, it is strategy and psychology. Successful traders don't buy based on emotion, they buy based on patterns, charts, signals, and market behavior. Your biggest enemies in trading are not the market, they are fear, greed, and impatience. To overcome them, you need a solid foundation. This brings us to our second point, learn technical analysis, or TA. Technical analysis means studying charts to predict price movement. You'll learn concepts like support and resistance levels, which are price zones where the market tends to stop and reverse. You'll study trend lines to see which direction the market is heading and understand market structure to identify highs and lows. You'll learn to read candlestick patterns, which are like the body language of the market, telling you what buyers and sellers are doing. You'll also analyze volume to confirm the strength of a move. You'll spot breakouts and breakdowns to find entry opportunities. And finally, you'll use indicators like the RSI, MACD, and moving averages. These tools are your compass. They tell you when to enter and when to exit, which is the heart of profitable trading. Third, start with spot trading, not futures. Beginners often jump into futures trading because of the high profit potential with leverage. But futures come with extremely high risk. One mistake, one bad move, and you can lose your entire account in minutes. This is called liquidation. Spot trading is much safer. You simply buy an asset, you own it, you hold it, and you sell it later for a profit. There's no liquidation risk, no borrowing, and no extreme pressure. Master the spot market first before you even think about futures. Fourth, and this is crucial, learn proper risk management. This is what protects your money and keeps you in the game. First, never invest all your money in one trade. A common rule is to risk only 1 to 2% of your total capital on a single trade. Second, always use stop losses. A stop loss is an automatic order that sells your position if the price drops to a certain level, limiting your losses. Third, don't overtrade. Trading out of boredom or trying to win back losses is a recipe for disaster. Only trade when your strategy gives you a clear signal. Remember, professional traders survive and thrive because they manage risk better than beginners. Fifth, learn trading psychology. Believe it or not, this is more important than any chart or indicator. Your mindset decides your success. A disciplined trader grows their account over time. An emotional trader eventually loses it all. Trading psychology teaches you when to be patient and wait for the perfect setup, when to cut your losses and exit a bad trade, and when to simply step away from the charts. It helps you recognize when the market is trying to manipulate you with false moves and when the hype around a coin is completely artificial. The market consistently punishes emotional decisions and rewards patient, disciplined ones. Sixth, create a trading system. This is your personal set of rules that you follow without fail. Every successful trader has one. Your system will define things like your preferred timeframes. Do you trade on hourly charts or daily charts? It will include your specific entry confirmations, what signals must be present before you buy. It will have clear exit rules, when do you take profit or cut a loss. It will also define your risk to reward ratio for every trade. Your strategy might be a trend-following one, or maybe it's based on volume or specific chart patterns. Over time, your system becomes your identity as a trader, your personal edge in the market. Finally, the seventh point, and the one most people skip, practice before you risk real money. Use a demo trading account, which uses fake money, or trade with a very small amount of real capital to practice your strategy. Trading requires real-world experience, not luck. When you practice, you learn how markets actually react in real time. You develop a better sense of timing. You understand how indicators behave in different market conditions, and most importantly, you learn to control your emotions in a live environment. This is where true skill is built. So, why does step 4 make you rich? If done correctly, trading allows you to grow your account much faster than long-term investing alone. You start understanding the market on a deeper level than most people ever will. You learn the valuable skill of how to multiply small amounts of money. You can even learn how to make money when the market is falling. Trading is not easy, it's a profession. But if you invest your time into learning it properly, the rewards can be truly life-changing. And that completes step number 4. If you take trading seriously and learn it step by step, it can become one of the most profitable skills you ever develop. In part 5, we're moving to something even bigger. WEB3 skills, the highest income opportunity in the entire crypto world. So stay tuned and wait for the next video. Thanks for watching, and I'll see you in part 5.